Are you confused about the cash and accrual method of accounting? Don't worry, you're not alone. Hi, I'm Professor eMoney. I'm a CPA and an MBA, and I coach entrepreneurs and small business owners on how to maximize their profits and improve their business using accounting. But for now, let's talk about cash versus accrual. For accrual-based accounting, if you're a company that has inventory, most likely you're going to have to use the accrual method of accounting. Now, that's going to be according to IRS Publication 538, and you can go ahead and check that out in the link below. But IRS Publication 538 says, for most businesses that have inventory, you have to use the accrual method. So what is the accrual method? The accrual method of accounting is a method where you're required to match revenue based on when it's earned, not when it's received, and expenses based on when they're incurred, not necessarily when they're paid. Now let me explain that for a minute. Let's say you're a service-based company and you do business on August 1st throwing a party for a customer. On the date of the sale, on August 1st, you've earned that revenue after the party is over. Whether you've invoiced your customer or not, you should invoice them with that date of the party as the invoice date, and on that date you've earned the revenue according to accrual accounting. That means that the income is going to show up in your income statement even though you haven't collected the cash. Now let's say your client pays you 30 days after the party, so on September 1st. On September 1st, under the cash method, that's when you would record the income based on the cash received. But on the accrual method, you will record your income on August 1st, based on when it was earned. Now let's talk about expenses. They're very similar. Expenses are recorded when they are incurred, meaning if you have a legal fee, let's say there was some sort of legal attorney fee associated with that party, and you incurred that expense on August 1st as well. Well, even if you don't pay that until 30 days later, because your attorney gives you 30 days to pay, that expense was incurred on August 1st and it matches the party also associated with August 1st, which means that we're going to record the expense on August 1st and it's going to show up in our income statement on August 1st as an expense. Under the cash method, if we paid that bill 30 days later, then the expense would show up on September 1st, 30 days later. You might be wondering, why do we need the accrual method when the cash method seems so easy? This all has to do with matching expenses to the revenue that they generate so that you have a better idea of the net income overall generated by your revenue activities, meaning anything that makes you money, we also want to match the expenses that it took to generate the revenue to make that money. So that way you have a better picture of your business. So it isn't just the IRS telling you what to do, it's also good for you as a business owner to understand how profitable you are as a business by matching your expenses to the revenue that they generate. If you find this video useful, hit like, subscribe, and follow for more. You can also check out my accounting courses at stackeru.com.